Joining us exclusively is Related Companies CEO Jeff Blau. Good morning to you.
Good morning.
It's a lot of questions about where we really are in the real estate world, how distressed stuff is getting, are we at a bottom, what's going on, and you're at the center of it. So I'll start. Where are we?
Well, first of all, thank you for having me. Always good to be here. It's hard to answer that question in a very general sense because the real estate market, people say, oh, the real estate market is a disaster, or the real estate market is coming back. It's really segmented by asset types. And so you have to think about how are apartments doing, offices, which everybody wants to talk about, data centers, industrial, all these different asset classes. Most asset classes across the real estate industry are performing extremely well today.
So multifamily doing very well.
Multifamily doing great.
Data centers killing.
Data centers we should talk about, one of the best asset classes. And then offices are what's struggling. And you know, right now there is a supply-demand imbalance in office, and there will be real value. There already has been and will continue to be real value destruction in older office buildings. They're just, people don't want to occupy them. People, the back to office issue.
On a relative basis for your business, how big is the data center component versus the multifamily component versus the office component?
Right. So historically, our business began in affordable housing and multifamily. So a huge portion of our business across the country is multifamily. We actually are one of the largest private owners of affordable housing in the United States. So we are very focused on multifamily. It's been our core, and we continue to build and own and do affordable housing preservation in that space. Data centers are new for us, and I think it's the most incredible asset class I've ever seen in my career in real estate.
Is there a bubble in the data center business given some of the valuations?
I mean, the question is, and we all watch the reports, you know, for the big tech companies, what's their capital spend going to be in the following years. But this asset class is very unique for real estate. Each one of these buildings could cost $4 or $5 billion. You're talking about power numbers that we've never encountered in the real estate business. 100 megawatts, 200, up 500 megawatts. Those buildings, so what's amazing about them, power, as difficult it is to get, becomes the constraint to new developments. You don't have oversupply of these data centers, and for the most part, they're built leased to one of the big hyperscale tech companies. So for us, it's been a great opportunity. You may have seen this past week, we invested in a small company, Applied Digital, who's building a very large data center in North Dakota. But we'll be building in Chicago, North Dakota, Santa Clara. So there's a couple of big data centers throughout the United States. In Chicago, the state of Illinois and the federal government committed $500 million to bring a quantum computing company to Illinois called PSI Quantum. And we will build the fastest quantum computing campus, where they will build the fastest computing computer in the world, and then a 500 megawatt data center attached to that.
And then there's the office.
And then there's the office.
And then there's the office. Can you repurpose some of the office and to become a data center? That would help you.
Not really.
Because of the energy issues.
Yeah. So the office is really a tale of two cities. We've talked about this. New buildings are doing great. So over at Hudson Yards, we're 100% leased. Any space that comes up gets gobbled up in a very short period of time at the highest rents we've ever achieved. So new buildings are terrific, and the demand is great. These older buildings are very, very difficult to lease. You know, we could be leasing space at $200 a foot in our building. You can go across the street and attempt to lease for $50, but there's no tenants that want them. So whether they'll be repurposed or torn down, which is actually what I think the better solution is.
So you think there's going to be a lot of teardowns around this city?
I think there will be a lot of teardowns of the B buildings, and there'll be, you know, a lot of equity lost, and you know, CNBC that gets in trouble because those buildings were over levered, and there's just no demand at all.